In terms of markets, we're expecting a lower opening for the broader markets, and we are waiting on earnings out of Walmart. Our next guest has a new report about how events like this can be disruptive to the markets and your money. We want to bring in Samana, global quantitative strategist at Wells Fargo Investment Institute. Samir, thanks very much for joining us. First, let's talk about the breaking developments of the morning. What kind of impact would you expect on the economy globally as well as markets?
Well, we would expect probably a very small impact. You can see it in the futures where they fell a little bit, but they've pretty much rebounded. In our report that you mentioned, disruptions and volatility, we talked a lot about, in historical context, there's a lot of these types of events which have acute short-term impacts, but then over time they don't really impact the economic or the fundamental backdrop.
Now, yesterday we know that Goldman Sachs made a big call in terms of downgrading equities, going to a neutral, basically saying until we see sustained earnings growth, stocks do not look attractive. Do you agree with that call, or are you on the other side of that trade?
We're on the other side of it, and you got to look under the hood and kind of see what's driven earnings to be flat. It's been the dollar, it's been oil, it's been some sluggish growth. We think those things reverse in the second half. The dollar's already come off a little bit yesterday, notwithstanding obviously with the Fed. Oil has stabilized, so that should put a little bit of an upward lift on the company.
So you would put money into stocks right here?
We would.
You use this weakness as a buying opportunity.
What kind of economic growth are you expecting to see in the second half of the year? The Fed seems to think the economy is going to get back on track and be at 2% plus. Do you buy that?
No, we're still probably in the, call it 2% range. Probably a couple tenths on either side of it. But that should be good. Good enough for U.S. companies to continue to expand their profit margins. In the report we talk a lot about how profit margins might have further to go if technology and a lot of other things actually allow companies to be a lot more productive.
We're waiting on earnings out of Walmart this morning, and of course we got the Fed minutes yesterday. Did you learn anything new in terms of where we are in the global economic story today?
I mean, the Fed still says that they're data dependent, and you mentioned Walmart. In essence, what's going on within consumer discretionary and retail is this seismic shift in how people shop and what they buy. I know a lot of people made a big deal about the consumer retail sales. We think the consumer's fine. They're just changing their behavior. You
have to believe that something like this, EgyptAir plane carrying 66 people disappearing over the Mediterranean Sea, impacts that broader consumption story.
I mean, again,
what do you think? Egypt, does it not?
I mean, probably tourism to Egypt probably suffers.
But you don't see a broad-based impact here.
I mean, what we've noticed with past, events such as this, it affects people's behavior for coming weeks. They maybe think twice about booking that airplane ticket. But if you were flying, intra-U.S., for most people, this really shouldn't be, as much of an issue.
Samir, so much of what drives markets is sentiment. When the Fed comes out and says, hey, we think the economy is doing okay, we think it's going to be strong enough for us to raise interest rates again in June or July or September. How does that affect sentiment? Do investors look at that and say, hey, maybe the economy is doing all right, let's go out and buy? Or do people say, interest rates are going up, I got to get out? What is the sentiment?
Real quick, we've got breaking news on this. Go ahead, Samir.
I'll break it down real quick. So basically what the Fed said is, if things are really good over the next few months, we'll raise rates. If that's their reaction function is things are really good, we're going to raise rates, those really good things should flow into earnings, which is what we're talking about needs to happen to drive stocks higher.
All right, we will leave it there. Samir, good to have you on the program this morning. Samana, Wells Fargo Investment Institute. We will see you soon, sir. Thank you.